Surprise, surprise. The Fed is here to save the day. Wow, what a afternoon of just rippage. The shorts got taken to the cleaners today. I know the few shorts that I have are hammering my tail. But nonetheless, we had a very good day over at daytradeadvisors.com. We made some great money actually. Came in short the SPOOs, covered. Came in short again, or got short again, covered. Got short again into the rampage, covered. Got short again on the second test of the high, covered. Should have got long, never did, but nonetheless, it was a great day in the trading room, and I'm blown away. I'm blown away that the Fed cut 50 points. I'm not sure. It is what it is, and we've now come into a bullish situation. I was pointing out that 13,700 on the Dow. Let's look at this here real quick. The Dow has now gone parabolic. We're nearing overbought, and we'll see how many days up we can. The buying stays up here. Every short got crushed, squeezed, rocked, whatever you want to say. And here's the chart. Again, I had that 71 line was right here at 13,700. We're through it. We closed strongly through it. The SPX, again, 1523 is kind of my number there, so we're not totally through that. On the SPOOs, we did get through it, closed at 1533, and that is also very bullish. So we're seeing here a entire V bottom. This is not much different than we saw back here in the spring months when we did the same type of move down here, and we're coming back. I mean, this is a very similar bar, but twice the size that we had here in late March when we rallied and then tested. So this is looking very bullish. Again, any test of the 1480 area now probably looks like it's a buy on the SPX cash. On the SPOOs, kind of the same thing. Again, we closed at 1533. Here's the chart. Very bullish. But I do want to point out a couple things here because really kind of blown away here by these moves, as I believe everybody is. But a couple things I want to point out. The Fed is obviously, to me, in panic mode. They lowered the interest rates half a point and the discount rate half a point. This is really what drove the massive move that we had there. I mean, if you look at the 5-minute bar on the SPOOs, we went from 1500 where we had based for 3 hours right up to 1525. So they took out the shorts and shot them. That's where I told our chat room to get short up to 1525. It almost worked to a T. Came right down to 1512 where we covered. We got short again at 1525, covered here. So it worked out well. I should have gotten long, and I said this in the room. 1521 looked like the spot to buy. I did not buy it. That was another 12 points up into the close, as you knew they were going to take them up. Fed days are typically, and I don't trade them that much because they are the nastiest and most unpredictable that I've ever found out there. And one thing I don't understand it. It's a very strange thing. You've got gold hitting 7-year highs. You've got oil hitting new highs on the move, hitting 82.20. Gold is trading 732 as we speak. Here's the daily chart. So you've got inflationary look on gold. Gold, again, is usually indicating high inflation, and we're going here to new highs on the move here in gold. Just unbelievable moves here. The oil, QM, traded at 82.20, also up another 2%. Gold was up 1.18%. I'm not sure what to think. The interesting thing, I think, is that when the market goes up fast like this, it usually doesn't hold, I tend to find. But we shall see. What I found interesting was while the Fed is claiming that, I find it ironic that they make a statement saying that the market needs to be calmed, but then they continue to throw fuel on the fire by lowering rates. So they're talking about fighting inflation, yet they're encouraging inflation, which I don't particularly understand. And when I don't understand, I tend to trade smaller and move to the side, and that's kind of what I've done over the past few weeks, which suited me nicely coming into this move. So, we'll take it for what it's worth. But the long bonds, and I'll throw this up real quick, the USZ contract, kind of had a different move that had a different response than stocks. They were unable to hold the recent levels, and they made a lower low. So it's very interesting to me how the Fed can artificially keep rates lower, but in the real market, the bonds, the long bond, the rates go higher. So we've got when the bond prices fall here, your rates actually this means that they're going higher. So what does this tell me? There's a very big divergence here going on. I tend to believe the bond market. I tend to believe the gold market. I tend to believe those things before I believe a short fueled CNBC love fest like we saw today. Now, again, you've got to trade it. We are where we are right now, and again, we've kind of flipped to the bullish side, and I think you've got to buy some dips. But be aware that until we take out new highs across the board, I'm tending to be pretty conservative in here. And again, I may buy some dips on some trades, but this market is wild. I mean, we could go. We've got an election year coming. We could go like this, I guess, for a couple more years and continue to fuel the party, because that is what the Fed is doing for us right now. So again, watch what the market says. The market says here that rates are going higher, and not what the Fed says, which was we're reducing rates. The market is telling me rates are going higher. On this move again today, they continued. The long bond fell, which meant again rates are going higher, and the Fed dropped the Fed funds rate. Keep in mind that the Fed does not control the, or rather, you and I cannot go up to the Fed funds window. This is only for the banks. So this is an essential, this is essentially a bank bailout that we had today once again, and that's what we've been talking about. So the Fed is talking about how they don't want to bail out the individual and the speculators, but they are bailing out the banks who put these people into these loans. So that's where we are right now. We're stuck into this mode where it's a very strange time. One that I can't say in my 15 years plus of doing this that I've ever seen anything like this. The continued gaming of the game, and we'll see how far it goes, how high they're going to take it, how real is the buying. I don't know. Nobody knows, and I guess we'll find out over the next few days. But very interesting times indeed. And we'll be back tomorrow with more of our 2 cents. Peace. Have a great evening. Party on. Bernake. The Bernake Bump is on.